Hello traders, Gary Wagner with the Gold Forecast. Today is a historical day, October 7th. It is Thursday and this is the Daily Report. We have had a rather drastic profit-taking session in Forex Gold and gold in general, currently trading at 1335, 1336. It is trading down roughly $13 to $15. And at the same time, in the evening session, we did get our contract high, an all-time new record high right up here of 1365, roughly $100 above the 1265, which is the old contract high. As I said, today is absolutely a historic day. Hitting that high and then at the same time having a very, very strong round of profit taking is actually reminiscent of some of the recent highs that we've gotten. Here, this was at 1265 that I talked about just a moment ago. And the one thing that you'll notice is that the pattern that is formed in a candlestick pattern is what is known as an engulfing bearish. Now, an engulfing bearish outside day is simply a day where the market opens above and closes below. In other words, it engulfs the previous red candle. Now, in this case, the red candle is small, but there is no doubt whatsoever it is an engulfing bearish. However, to take that call, the only way a candlestick technician would actually utilize and take that call is what we call a confirming candle. At that point, and what a confirming candle is, of course, is on the following day, you get a black candle, and it would have to, of course, open at the close of the prior candle, and then it would trade below it, something like this. Now, there's a couple of things that we want to pay very, very significant attention to. The first of which is that it is one day. I have been expecting some sort of a retracement and some sort of a retracement for a long time. We haven't seen it. In this last run, our typical, this is the largest one-day drop that we've seen in this last day, or in this last run in waves 1, 2, and 3. And what we have coming out tomorrow is the U.S. unemployment report. And that's going to really provide, I think, traders with some fundamental data which will give them the impetus as to whether or not this will be or could be a real full-blown retracement, or if it's something like the past and that it's this significant round of profit taking and then the market carries up and moves higher. Interim term, I am bullish. Long term, I'm extremely bullish. Over the next couple of days, I really think it's going to have to do with what we see with the jobs report. And that will be, I think, a key determining factor, because right now, gold is trading very, very close to the dollar. In other words, as the dollar makes these new lows, gold tends to come up and make these new highs. We still have the whole idea of quantitative easing going on. That has not come out of the market, and that cannot, but it has been factored into the market to a great degree. So I think that what we need to do is to sit and wait. Would I sell this market? Not with your grandmother's money. Absolutely not. I am not a seller of this market, even if this market came down on a retracement. And let's go ahead and put in our Fibonacci numbers here so that we can see what is possible. And I'm going to run Fibonacci from the beginning of wave 3 all the way to the top. And let me go ahead, traders, and put that in the color coding so we can see it a little bit better. And as you can see, I've gone ahead and added our Fibonacci retracement. And once again, Fibonacci retracement, I am drawing from the beginning of wave 3 right here to this absolute record top we hit yesterday, which is 1265. And here's what we're seeing. The 23% level right now is 1335, currently right where it's trading at. The next level below that is going to be 1316. And then the level below that is 1301. So even a 50% retracement would still keep us above $1,300. My sentiment is, of course, we're long, approximately $5 from here, $14.40. We have a stop that is well below that market price right now. So I really believe that until we see the trading activity tomorrow, one day does not make a retracement. It certainly makes a profit-taking session, but not a retracement. We do have to wait and see. We do have to wait and see, if there's follow-through. If there's follow-through, I might have a different idea. But as I said, if we're in a super bull cycle, and I believe that we are, our retracements will be there, but they'll tend to be shallow. This day had a $40 range, so it's back to the old days of what I've seen in the market when it has sold off. However, the big difference is, first of all, it did come up and rally off of the open here to this new high, and it is certainly coming off of these lows here at 25. It's $10 off of the lows, rather than having sustained and complete follow-through. And I think that's what's important, because if you take a look at some of these sell-offs here, when the market sold off, you had the market close very close to the lows of the day. And you are not getting that right now. That's the one thing. If you notice, here's the close here. Even in some of the other areas, these long black candles tend to be long because you get that close that's very near on the low. You're not seeing that right now. And so I'm not saying that we're not in a full-blown retracement yet. I am saying it's much too early to tell. A round of profit taking, I believed, was necessary 2 months ago. So it doesn't surprise me at all to see it. It's really going to be, in terms of a key, what we see for follow through tomorrow. This is Gary Wagner wishing you, as always, good trading, and we'll talk to you on Friday for the wrap up and weekend review. Bye-bye.